guys, welcome back to the channel. Today's video, we're going to be talking about starting to invest with as little as $100. I'm going to go over some tips through there, guys. Now, overall, traditionally, you needed a lot of money to invest. There was a point where you had to have minimum balances within brokerage accounts, things of that nature, to really get into the investment game, but that has changed entirely. When you look at things like Robinhood, when you look at Acorn, when you look at a lot of the micro investing strategies, you can invest with a very little amount, and it really gets you into that category of being an investor, which I love. I feel like the earlier exposure that you see to stocks and bonds, mutual funds, all of that area, the more you can kind of develop, again, at a younger age if you're getting into it. First one we're going to look at is the micro investing. This is putting money into the stock or exchange funds. Mainly ETFs is what I focus on if you're looking at a very minimal amount. Big thing with ETFs, guys, is it spreads the risk across a bunch of different sectors, which is the way that you want to do it, which is the reason why ETFs are really important. In addition, most ETFs have a very low to almost no fees that are associated with them, which is another reason why I definitely love ETFs. Now, I'm not a financial advisor, but I do recommend the VOO. If you look at the Vanguard S&P 500 fund, you're looking at the 500 largest companies in America, and that is the ones that you are investing in. It keeps everything here, which I do like, and I'm comfortable because, again, you're kind of spreading out the risk. Now, number two, looking for no minimum fees. This is where Betterment comes in, M1 Finance. Out of those two, most of you know, guys, M1 Finance is what I use because M1 has no minimum investment requirements, which I like, starting with as low as $100, but there are no commissions. This is really something to really consider, guys. If you're going in, some commissions are a set with like a monthly fee, could be a maintenance fee, could be a commission fee, could be percentage based. You have to be really cautious when it comes to the fees that can be associated with some of the investment accounts, and some of them even do per trade. So you actually pay a fee per trade. Now, again, there are a lot of things, including M1 Finance, again, that do not have those commissions. So definitely check them out with the links down below. Number three, consider the index funds. Like I said before, guys, index funds are a great option for investors with limited funds. Tracking a particular index, whether it's the S&P 500, also offers a big diversified portfolio of stocks at a very low cost. Again, if you put $100 into the fund, it is going to be split among 500 companies. You're not going out there buying Apple, buying Amazon, buying all of these individualized companies, which of course can have a much greater risk than going over the market in its entirety. Now, number four, we look at the low cost investments. Again, when you have limited funds, low cost, no cost investments are what you're looking for. If you start building up a little bit of a nest egg as you continue to invest, guys, if you're paying fees, if you're paying a higher fee than you should be, it is going to literally eat away a ton of your investments. Even when you look at financial advisors, they usually charge 1%. Well, 1% on $100 is not very much. When you start getting into $1,000, $10,000, $100,000, all of a sudden the 1% starts getting just exponentially larger as you continue to build your growth portfolio. Now, number five, and the final one we look at, guys, is one of my absolute favorite, is setting your long-term strategy. We have said from the beginning, when you start investing, guys, it is a long-term commitment. When you put your first $100 in, if you're in high school, if you're in college, even if you're getting into your career, your job, you are now an investor. You own stock, you have ownership, you have stake into a company, which I think, in my opinion, guys, is one of the coolest things that I have ever done. I started getting into stocks and bonds investing when I was relatively young, without the guidance of really anyone. So it was kind of a kind of pick and choose learn. I actually invested with Invesco. If you guys even know, I don't even know if they're still around anymore, but that is where I started, and everything was done, to put it in perspective, through the mail. They had everything that came, even when you bought different stocks and bonds and things of that nature. They sent you the content through the mail, which again is kind of crazy, but the long-term investment strategy, making sure you stick with it. We have always said consistency over intensity will bring rewards, guys. Consider your investment goal, risk tolerance, develop a plan for your portfolio over time. Now, this plan, of course, can evolve, can change over time, depending again what you're investing in, but you want to stick to the strategy even during market downtimes. And this again is one of the most difficult things, even being a newer investor. If you put $100 in there, all of a sudden you check it in a week, it's down to $97. Oh no, I lost $3. I'm pulling everything out. That is not what we want you to do, guys. Again, long-term investment strategy is what you really want to do. When you look at an average yield, 6, 8, 10%, when you look at an S&P 500 fund, things of that nature, guys, and you're not going to get that anywhere else. Now, granted, if you're 65, 70, 75, if you're, getting into the age of retirement, you're really cutting down the years that you have to make back any of the gains or losses if you do suffer any of those. Moving stuff to kind of more safe, stable. A lot of people put a lot more into bonds as you do age. But again, we're looking at starting to invest at $100. And if you look, $100 a month over the course of a year, like we said before, all of a sudden you have $1,200 in there. It goes up roughly 6% per year on average. All of a sudden, the $1,200 is compounding interest into higher amounts. If you can continue that contributions in there, it is going to grow faster and faster. The snowball, guys. The snowball will not only get bigger as it goes down a hill, it will also get faster. The compounding interest, the dividends you receive, everything you keep pumping back into that giant snowball. And again, it's a pretty cool analogy to think is over 5 years, 10 years, 15, 20, let's say even 30 years, if you're consistently putting $100 in there with the compounding interest that you get, you will be absolutely shocked how big that snowball gets and how fast that snowball can go. When you're even getting 40 and 50 years, it is astronomical, guys. I know they've said the eighth wonder of the world is the compounding interest. If you do calculators, if you stick to it, and again, this is going to take a lot of discipline, guys. A lot of people, as soon as they need something, boom, they're taking money out, they're borrowing money, they're pulling money out of their investments, they're cashing them in because they went up a little bit. But again, long-term strategy. Most of you know I use sticky notes for this. I have one sticky note that says stick to the plan. I've always said this, really do stick to the plan. I have a plan to pay off the house. I have a plan to consolidate any debt, which now the debt is completely gone, but also having an investment strategy that I'm working on every single month, which it has been over, I think around 2 years now, that we've been consistently investing in the market through a couple different funds, which again, through M1 Finance, that is where I have everything, guys. They have awesome returns that I found with some of the ETFs in there. I know they do have them in a bunch of different places, but M1 Finance does have the zero commission base, so you can go ahead, invest in there, and it's not going to cost you anything. So, all right, guys, that'll do it for today's video. Let me know in the comments what you guys think, and as always, thank you guys for watching.